Hello, traders and investors. Thank you for joining in today's live equity and precious metal discussion. And also welcome to all of those who will be watching later in the YouTube channel. Part of this discussion will be published in my YouTube channel. Now, I will also give you about two important updates that this is my website. You should keep a regular check now, especially from New Year onwards. We will be starting with some of the classes like we have been doing Sunday stock storm. We will be soon be doing about Japanese candlestick charting and foreign exchange. So all the updates will be published here. So keep a regular basis check on my website. As of now, exclusive Rainbow member section opening has been delayed. We want to launch it the best. So we'll try at the beginning of the next year to launch this exclusive section for the Rainbow members. And all the offerings where majority of the joinings are free are meant to benefit the community of the traders. However, the recordings are not always free, but usually the joining of the workshops and others, they are free to join. Another update is regarding TradingView. The Black Friday sale is starting now. Trading is one part is kind of a working capital cost for this business. So for me, TradingView is the working capital cost. So it is important if we can keep the cost lower. So Black Friday gives great discount. So you can, even if you don't have recent expiry, you can top up in future. The price can go up also. So not extremely say 5-10 years, but at least you can extend it by 1 or 2 years. So this will be remain there for 7 days. 28th of November, the sale will end. Now let me start with today's topic of discussion. That is, we are here to look at equity market. I think it is an important juncture change in the market, which I have highlighted for now several weeks, that I have moved out of especially the US equity market and moved part of my assets, means majority part of the asset, into bonds, where I can get the return and once again get into equity when the situation and the timing is right. So first, if I'll take a look at the mother equity market, that is the US S&P 500, and please note for this analysis, I'll largely be using my rainbow setup, which is not difficult to understand that much. The candle shows the price action and all the readings are available. This is the weekly chart, and I can also use the line chart also in future. These are the only two chart type. Currently, the background has turned yellow, which in my setup means short trend has become neutral. Price action strong fight is going on, and in the weekly chart, maximum stop loss of mine is hit. So this is, and I have started to exit early because more it was sometimes before the signal from experience or gut, something does not feel right. And this was the case, I think, given the current geopolitical and other scenario, the risk has gone up. So it did not make sense to me to continue over position in the equity. So it is trading and investing is not just about a strategy to me, it is also about changing posture, which is aggressive, defensive. So international equity market and especially the equity market also, I'm into defensive posture now. S&P 500 in the daily chart from the candle and also lower meter, which shows, and it can change the readings, but it is currently showing the global equity market situation in the daily. S&P down, Nasdaq, Euro stocks, which is European blue chip, Italy, Spain, Germany, China, everywhere I can see weakness. In the weekly chart also, this is the weekly chart, I can see weakness in US, Europe, it is now spreading. Germany, China, it is spreading. Positive news is our market, Indian Nifty, finally underperforming for say 1 year, is somewhat humming strong. The Indian equity market is strong and that can create a trouble also. People may get blindsided, मतलब नहीं देख पाएंगे risk, and sudden downfall comes, they may get stuck. So my posture is defensive, but I am open to Indian equity opportunities. India is somewhere in weekly strong, but not based on the daily chart. It is significantly falling as well. So several stocks will start to show weakness, but once again, to remain in the stocks, we'll have to look past the weakness and continue to remain, if we want to, in the strong stocks. Nasdaq, the tech heavy index, similar picture, significantly down, some changes going on, and this kind of weakness I have not seen at least since this time April. At the beginning March, April, Nasdaq was weak. And from my analysis of the risk, this is the Nifty chart, which is in the, just a moment. Okay, this is the, let me change it. It is the weekly chart first. I can see the Dow structure is bullish, but overall equity market risk gone up. India also risk has remains elevated, and the new change that the turmoil risk has gone up, which means the downturn that the equity asset class pressure is facing can be a bit longer term. Now after this, let's look at the risk level in the daily chart. Nifty is turning, but we can't say it is bearish. As per Dow structure, it is giving a correction. So it means that our market is still relatively stronger. And if you still want to remain as a general rule, you can go for RS positive, like in the rainbow setup, which has relative strength extreme. Those will be the better bets. What I am concerned about is synchronous sell-off in the equity, means overall equity coming under pressure, while India has not, but overall equity downside risk has gone up and we are in a recessionary cycle. That will be my add-on worry. So if other equity markets will generally go down, and if it is the recessionary downfall, which I don't know for now, then the Indian market will suffer as well, inevitably. So let's look at the Nifty with this chart, which will make clear picture that it is still bullish in the weekly chart, no doubt about that. Nifty is still somewhat bullish in the daily chart. That means there would be stocks which are still structurally strong. Nifty in the 125-minute chart undergoing a clear correction. Fight is on. Now the possibility has increased that Nifty can once again give us a correction, go to range. So with this current movement and given the headwinds coming from US and other market sell-off, we can, even if it is bullish, it is becoming clear there will be more wave Z structure than a clear rise what we have seen. And we will now, the bulls have to make a bigger gain, will have to focus on the coming back or returning of strength in the US market, means other markets, as well as if we are getting the trade agreement. If we don't get a comeback in the international market but a trade agreement, Nifty bound big up move can be used as a sell-off trigger. Buy the rumor, sell the news. So Nifty 125 minutes chart, it is weak. Let's look at what is the option suggestion is that I'm doing. You should not jump into any trades without having a proper plan. So mine are live discussion for my own blog. It is not to be used as a trading signal. So currently I'm not very bullish, but I'm not bearish on Nifty as well. So my approach will be defensive but bullish. That means I'll be more inclined towards defensive strategies like bull put spreads and not be too aggressive. And for stocks, I will look at the Nifty 500 chart and give focus more on the weekly scenario. Stocks, I will prefer to look at the weekly chart only. That we have covered in my Sunday stock storm as well. Mid cap has been the strongest, no doubt. And looking from the weekly chart, the momentum structure, it is somewhat still bullish, the mid cap. If we want, we can change the settings here. Just give me a moment. Let first one be Nifty, Bank Nifty. Let's say Nifty 100, Nifty 200, Nifty 500, Nifty mid cap and Nifty small cap. And let me make this strength table slightly bigger so we can check the strength as well. So what I can clearly see that Nifty 50, weekly chart, Bank Nifty, all are significantly strong. The portion of the Nifty that is not strong is the small cap. So if I see any weakness, especially in the small cap, in the defensive strategy also, that means out small cap. If I look at the daily chart where the recent weakness is coming from, let the strength calculate. Overall, Nifty 50 is more bullish. That means the structural weakness into stocks, while the main index remains strong. Nifty 100 falling, 200, 500, mid cap is falling less. And small cap is the weakest and more falling. So currently being more defensive means if I have to invest into equity as part of my strategy, one will go for Nifty Bs now, which will be tracking the Nifty index via an ETF. That can be anyone. But overall equities are weakening. That part we have been able to clear up. This is the small cap chart which we have discussed in previous discussion, and Sunday stock storm is currently the weakest segment. So currently Nifty, I think if this is a major downturn, which it looks like, but Nifty can still continue to be range bound. And that we have already said is one of the bad situation, maybe worse than sell off, because passive investors will, or mutual fund only say those who are going small caps will not be making any money. Even if they are not losing, they will not be making the money and losing out to the inflation. And currently, previously, gold has given awesome run. but gold situation is not that bright anymore. So gold is not going to serve as an asset class, at least for now, which is going to give a protection against equity downfall. Gold I go for both ways, as an investing as well as a trading. Gold trading, a combination of daily and 2 hour is used. This is the COMEX gold. I can see bearish movement in gold, but from my overall chart structure readings, I can know that this bearish move is not strong enough. Gold does not still look significantly weak also. That means in the longer term chart, it is more of a range bound case. So 2026 heading towards, we are in November, soon it will be a new year for the traders, not financial year. That means we are going into the, at least for now, into the new year with possibility of underperformance in two important asset class, equity and gold. So gold, I am in the trading bearish, but only slightly. I don't think it is significantly bearish, but where the weakness is latest has been the silver. It is still going to be range bound, but in the short term, silver gave a better opportunity. That means as silver has higher volatility than gold, even in a small range bound situation overall, both in gold and silver, overall we have a range bound situation. We are getting silver better runs because of the higher volatility. So gold, silver, both are going to be in range for an investor. So it is not going to be a very good phase for the investors. It looks like gold, if I look at the daily chart, which is meant for investing, is now showing more range bound possibilities. Buyers are still strong in the weekly chart, but strength meter, gold, silver, all weakening. So only counter which is showing strength is the natural gas, and that is because of the electricity situation. Electricity, there is likely to be shortage in the short to medium term because of the AI data centers, cooling need, lot of inflation is high, wage inflation, Fed interest rate cut remains in doubt. Given the situation, two important asset class going to underperform for now. Even if does not fall big, at least underperform. So in this scenario, focus would be definitely some part derivative trading is different, but asset wise, being on the defensive, not to lose out the money. That's why in my international portfolio, I've pushed more towards bonds. And also India, compared to the equity, bond has become now significant investments. And I'm also looking for strategic investments like betting on a long-term decline of currency, as I cannot trade currency, but we can use exchange traded fund. And then it was not currency trading, but currency swing allocation. My swing allocation into currency means cash assets have gone little dollar bullish. This is not trading, this is swing holding into where I will hold my currency. If I am holding some cash assets, I think dollar is the now bet. And USD INR, our currency, has been in a steady down path. I don't think anything has changed regarding that. We are in a structurally down path, USD INR. But trade agreement with the US can give some benefit to the Indian rupee depending on what we are getting. So this is the overall. We have seen global market situation, Indian market, and I have shared my investment or current positioning posture. But you should not, I could be very wrong, as I am always open to possibilities. So it is important not to flow with anybody's idea, but you analysis. Similar, if you look at say S&P 500, anyone say could have looked at simple Dow structure, and you could have seen okay a bearish Dow structure in weekly, which is always important. And also anyone could have seen a bearish Dow structure in daily as well, which is very simple. But after that, the work we all have to take up, what we are going to do, given this is the scenario. So in this video is not meant for our trading strategy. This will also help me in the future when I want to take a look back. And this is about how am I approaching the current market condition. So that's all, friends. Thank you for joining today's discussion. Now I will be open to further questions. Thank you. You can put your questions in the chat box. Let me see if I can. No, I have not opened. Now you can write in the chat box if you want. If you have any particular question, anything that I'll be sharing will not be our trading suggestion. It involves many different factors, how much we will invest, what will be our exit plan, etc. So if you have any questions, put it in the chat box. विशाल जी बोल रहे हैं गोल्ड 1 to 3 year view. Sorry to disappoint विशाल जी. I have given up that completely, and I approach to get better and better in my trading, I have decided future cannot be predicted. I can understand cycle. That's why if you check out my social media, I have asked to buy gold around 49,000 because we are in a recessionary cycle. But recessionary cycle, I don't know many things. Like in the currently, I believe we are in the second phase of the cycle, which is market downturn. But exact when it comes, I don't know. And also the length of how long this downturn will last, that also I don't know. But one part I know, that when the downturn will end, through my specialized way I look at the cycle, I will know. And the third phase is very bullish for the gold. Those part I know. So will it, if the downturn say goes for say like 1970, where it lasted almost 4 years before recovering. So my bullish should be after that, during that recovery, to go for the gold. So that is my approach. And in the meantime, I focus on, first of all, many people get this part very, very wrong. They think this chart shows the future. It does not. It shows the present. So that is the first assumption, where gold will be. Where say this is not gold, this is S&P. So let's go to gold. Where gold will be, as if this chart is showing, because we know some Fibonacci or something. It does not. It shows the present. So my focus is to look at the present and think about what are the possibilities. And based on the possibilities, how am I going to play it? So how am I going to play it? I've been updating around these times. I've exited from the swing. SGB, I have zero plan to exit. So, but that is my decision. And gold, I'm doing more trading, which is daily to 2 hour, which I can see gold is bearish, but not that bearish. That's what we discussed. Silver is more bearish. So trading is short term. Gold, when I see long term, I'll look at the long term chart, and I can see a correction is going on in silver. Now gold is not bearish, but if it breaks lower, it will be bearish. Then it will be very interesting. So that's about it, about gold. But so I don't know the future, and I could be very well wrong. So don't listen to me and trade. Have a proper plan how you will invest. From a global portfolio perspective, where should we keep our funds? I, I can't say that. This is not an investment advice. I've shared Venuji already what I am doing. I have gone defensive. It's to me, it's like I have been given the eyes, and this is a very important lesson, which, because my first focus was analyst, later I became decided to become a trader. And trader, one part is surrendering to the market, means calling. Many things can happen. S&P can go up, Tesla can go to record high, Elon Musk will reach Mars. Many things can happen. But what I believe, that if it's a walks like a duck, swims like a duck, it's a duck. If it's a Dow structure bearish, if in my setup, if I look at, okay, Dow structure, if I'll not look at, I'll look at through it my setup, say, and it is bearish. And when it is bearish, I'll not doubt it that it is something else. So definitely, if that is not, the equity is not the best thing right now, that part is becoming very clear. Whichever way I look, weekly, daily, that means in my defensive posture should be more protecting the money. So how can I protect the money? Via the bonds and still grow. And suppose we'll consider, okay, bond maybe kuch log fixed deposit 7% to return there, but 7% is beautiful. If Nifty goes down 7%, we are making 14% outperformance. So as an investor, say I will not exit a strong stock if I'm still in and it has not given me exit. But if some stocks are maturing, I will be inclined to take the profit and not to jump into new next to finding which could be the next stock, because I have gone more defensive posture. Next is, what's the reason for recent global fall? Because of employment data of years. It is an old employment data, September. Last night I held a session for this. This was our job, or anybody's job, analyst as a portfolio manager. They will call it AI bubble. They would call it China is selling cheap AI. They will call it Fed will not cut rate. Possibility has gone up now because the data will not be released. Employment data before, as employment data has to be released before the Fed, but now as per latest announcement, employment data will be released on 16th of December after the Federal Reserve interest rate decision. So Fed may not cut rates. Now we can come up with many things, and all of them could be true as well. Now they should help in guiding the probabilities. You have to consider the fact, Pavanji, that there would be still 70% of the world that you will not know. But there could be part you can know, like we are in a recessionary cycle. So when we know that, and with that, what is the chances of the current market happenings? Means you are thinking in terms of possible outcomes. That means there could be a range of reasons why US. What about yesterday fall? But US market was showing weakness from before. If you look at my past Sunday stock storm, at least 3 weeks ago, I've been highlighting. No, it's not feeling well. I'm squaring off and going 80% of the position into either cash or bond or strategic, means from away from equity. So that is the way to, for me, to have a defensive posture. A position taken in gold beta should square off now since it's nearing expiry. Yeah, you can, mean 7 days before the expiry, it is better to go. Gold beta is liquid in many months, so you should not have any problem. We are not here to take delivery. There is no special expiry related trades. These are global counters. So here we play the same gold. Short term movement, say for short term trader or intraday trader. Let me make the gold chart. Click the proper settings. This is the weekly chart is gone. Yeah, it is commodity. So I'll have to go GC1, that is the COMEX gold. And this is the one. So overall, yeah, if I'm 21 close by, I'll now tend to square up. Gold does not look that bullish. It is somewhat bullish, sorry, bearish. But उतना भी bearish नहीं लग रहा है. More लग रहा है कि range. IT sector seems to be picking up. Yes, you are right. Would stocks in Nifty in IT sector be good investment this time? Let's look at it then. We don't know. First of all, overall, I'm defensive. Now let's look at if some sector is outperforming. I've seen IT the comeback. But I don't think Donald Trump is done with the IT. That is fundamentally, I think. Yeah, I can see some comeback. First of all, I'll have to change the setup. And rather than IT sector comeback, first of all, this is a clear whether it will sustain or not, we don't know. It can sustain. So in this situation, what I do, I will suggest, it is up to you what you will do. If I get this kind of situation, which I've been getting in the, say, even in the weekly chart, I will use my Pine screener, say Trading View Pine screener, which you can get, I think, in the premium. So if you want to use Trading View, you can use this special discount time. So I have sector wise and different type of list. So here let's do IT, information technology. So under information technology, I'll apply the screener. Basically, you can use your method. Basically, what we are doing, we are finding the strong stocks. So in the weekly chart, now I'll change it to, for example, say weekly chart, and look at where I'm getting if any kind of buy signal. So some stocks are ready to bottom set. So I can see these are the stocks. Infi could be one of them. So let's look at the Infi chart. This is not a trading suggestion once again. And also what I will look at, this buy signal is, stocks are different. It is not commodity. We can't jump on any buy signal immediately. There's many things to understand. So I will choose here the short trend as bullish, and say I will also want to look at if any stocks are really strong, that has quite a good strength score. In my setup, I prefer 70, but I look for maybe these are for future. These are the top 29. So I'll now put them into a list and look at them. Say let's go to a list creation. Say create new list, X IT sector. Save. I'll have to change the setup to, say, stock master to adjust it for the stock. And let's look at the XIT sector stocks. And these are the ones which are currently strong, like we have seen. No, it is actually not ready. Daily chart, it is correcting overall. So this one will not be important. Say this is at which different phase of its journey, but it is making a base. So I will take note of the stocks and think about what is the, given the current chart structure in my setup, what are the possibilities. Now, depending, say I have chosen this stock, for example, I have not chosen this one. For example, I'm say I have chosen this stock. Then I'll also have some other choice. And among those investment choice, who will take my money? That will be my approach. And at one moment in time, we'll try to keep it, at least I will try to keep it. General, it is best to do it between 10, but I have my reasons. So I will do around 15. In 15 stocks at one point, if you get a new one, then out of the 15, one has to go. That is my approach. And I will try to, as long as the stocks will give me the base return that I want, it is giving me, and I will think that it is going to continue to give me. Like, for example, one stock I have highlighted before, say Federal Bank. Bank has been strong. You can see that this stock is up this week. Even if this is not, do not jump into this one, entries are gone. There will be breaking risk management rule 1. So we can remain in the strong stocks and not disturb it unnecessarily, because it is giving our required return. But if the stock starts to show weakness and we are in overall, as we have seen in the market, that there is a bearish pressure coming, then we can think of if should we reallocate some part of that money or not. How to select bonds? There are, it cannot be discussed here. It's a vast topic. I cannot just choose this one. It can't be like that. You have to understand how bonds work. So if you are interested, you can join our Rainbow Journey, and there we discuss a lot of topics, not just about we stocks, cover options, and more importantly about the mindset buildup. So I think it will be better to ask in those kind of class. This is not suitable for this query. So I think majority of the queries are done. Thank you so much for everyone for joining today's session. All the best to all of you from my side. These watch lists that you are scanning, are these available to Rainbow members? I think I have given a lot of watch lists to the Rainbow members. This could be very well included. I exactly don't recall, but I think it is not included. That should not be a big deal. We can anyway, it is available. If not, we can make it available. So that's not anything big. So remain focused on, if you are a Rainbow member, what has been discussed, our strategies, our approach, and also your mindset building. Those will be very important. So I think it is given. It is important that you check the drives and look at them. Any other query? Because query part will not be published, cut it and release the analysis part of it. You can recheck it once again. Rainbow weekly showing bull factor 12 plus extreme bull. Is there a, first of all, Rupesh ji, you should look at what kind of trade it is, buy support, buy breakout. Second of all, if there is a fading bull, it is used for quantity management. Means, is this the best one you can get in a overall when market is in downside pressure? Where we are price wise, what is the psychology level? What if is there currently entry? Is it really a good entry? Have you gone already 20% on weekly where you are? So all these has to come and you make up your decision. So it should not be just make that mechanical. These are to give you guidance about what the market is suggesting to you. Now you have to make the rational judgment. So fading bull, I will rather investigate why it is fading bull. Means the bulls are losing momentum where? And is it going to hurt my plan to get my 25 to 30%? If yes, do I have any better investment choice? Because there are 700 stocks. Maybe I find take a through my allocation ratio ke zariye, we can look at which sector is strong. Maybe in that sector, there are some investment, if I hold, gives better promise given the current chart structure. So come to a decision, Mok. That's why when you use the weekly chart, you have some time in your favor to make the decision. So don't rush any decision. Should you buy or not? ये doubt आ रहा है, मतलब the moment you have doubts, like should I buy, that is fueling a fear. It will definitely fuel a fear. Whereas this doubt, the uncertainty, opposite is certainty. Certainty removes fear, uncertainty creates fear. So fading bull, best not choose. Those are not going to outperform, but it depends on chart structure and many other factors. Any other questions? Thank you everyone. Make well decision choice. If we continue to invest well, you are going to be significantly well off in a short to medium term. May not be tomorrow. So remain focused on the game. Don't disturb the best choices that you have made just out of your fear. Overall market can go down. It can do 100 different things. So don't worry about the future part. Look at the present. Like if you have gone in a good stock and really in the weekly chart, there is no reason coming to disturb it. Very, very likely what you need consistently is not much. It will give you. And where you see weakness, be ruthless, don't be hopeful. Thank you so much. Best wishes from my side to all of you. And as well as happy trading, happy investing.